Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the CEO of CleanTech Vanadium, an exploration stage mining company focused on critical mineral resources in the USA. It's John Lee. Great to have you back on the show.
Yeah, thank you. Good to be back, Jesse.
We're going to dive into vanadium and fluorspar today, two very interesting metals I think more investors should be watching. Before we do that, I'd like to kick things off with your current assessment of the global economy, geopolitics, and how those factors are currently driving the commodities sector.
Right. I was on your show, I think not even a month ago, and I was chest pounding bullish about silver and said that silver is going to go to 50. And what we're witnessing is once in not a lifetime, but you're going to see this probably 2 or 3 times in your lifetime. I mean, first time silver went to $50 in 1980, and it took about 33 years for silver to revisit that level. And now from 2012 to 2025, so the first time is 33 years, and then second time to reach the neckline is about 12 years. And I think that cycle is going to continue again. So if you miss the boat on silver, I think there's still plenty of room for the upside. You're going to have to do it for six more years to see another rally. And the reason, Jesse, of this commodity rally really started out with gold at 1,800. Now it's 3,500 in about 2.5 years, uninterrupted. It's got nothing to do with inflation. If you look at oil right now, it's at $60. And it's not really got to do with geopolitics, because the geopolitics has been status quo for a while. There's been some escalation, but there doesn't seem to be a very direct correlation between any worsening geopolitics versus the action of gold. And as I mentioned to you before, I believe in the last show, I've been kind of on a few shows the last couple of weeks, is that it's all got to do with the agenda that's being set by, I would just say, the well-to-dos or the WEF, sort of as a placeholder. And it's not really got to do with inflation or any arbitrary or any indicators. It's just a matter of the plan that they have. And it's 2030. They want to get to everybody own nothing and be happy. Jesse, I want to step back a bit more further. We talk a lot about technical indicators, 200-day, 50-day moving averages, and silver. Gold and silver are both comfortably sitting above that, and so are the world equity market, which is entering into reflationary bull market. I think we talked about that last show as well. Nikkei just broke out at 41,000, and Dow, the S&P and Nasdaq are breaking out an all-time high. Every commodity is embarking on a bull market. Copper is breaking on an all-time high. Even oil and then platinum, which has some of the worst fundamentals, are starting to break out of and are catching a bid. And it's really got to do with fiats. Jesse, I want to get a little philosophical for a minute, or maybe before I do that, is if we step back and look at the bigger picture. Like, for example, historically, gold to oil ratio is about 10, which means that an ounce of gold buys 10 barrels of oil. And there's a lot of studies about it. And now an ounce of gold buys 50 barrels of oil. So gold on a very high level is indicating an indicator of either trouble or loss of confidence in the fiat money. And then if you look at another indicator is Dow to gold ratio. That's something that used to be, I think, Jim Dines before he retired. I don't know if you follow his writing. I think he retired about 10 years ago. So there's a lot of following of this Dow to gold ratio. And the peak of that was year 2000 when a one Dow will buy 40 ounces of gold. And Jim Dine famously said that the ratio is going to go back down to single digit. Everybody was laughing at him. And right now, the Dow to gold ratio is trading at 12. And I do believe it's going to go back down to 10. So there are some troubling, well, not so much troubling signs. There are signs that people are losing confidence of fiat. I am not so bearish of the dollar index. We also touched upon that before because all the other fiat currencies are subordinated to the dollar. And so now we're in a situation. The question is asked, why are the world losing confidence in fiat? I think it's got to do with too much printing. And then we're going back to history. Is it like 2 a.m, Jesse? I'm just kind of free roaming for a bit. I think your audience should find this interesting because not many people talk about it. Certainly, you're not getting this from the CNBCs. Is that back to about 200 years ago, before the founding of the United States, or if you go back to the 500 years ago, founding of England, gold and silver were money, like sterling pound. So that means a pound, you get a pound of silver, right, which is 450 grams. About 1800, Jesse, there are some very astute people from Germany and from Europe somehow coerced and managed to have this notion and hijacked the banking system. So I mean, there was no fractional reserve back in the days, okay, and the fiat and the gold and silver are equivalent, analogous. But somehow somebody come up with this genius idea of convincing the politicians back in the 1800s, more or less, Jesse, that hey, let me manage, let me manage the national currency for you. So that's that. And shortly after, about 20, 30 years later, somebody came with this idea and hijacked the banking system. And that's how the Fed was created in 1913. And the Federal Reserve is neither federal nor reserve. It is a private institution controlled by a few elites, and took over the currency of the United States. So hijacked the banking system. The Federal Reserve initially had, I believe, a 5 or 10 year tenure, and then that was and that was a device just to convince the politicians, right? Hey, I'm only going to borrow it for a few years in times of crisis of war, depression, and whatnot, and it turned into a permanent device. So Jesse, I want to really get down to the point about what the Federal Reserve is doing. It's not about employment, and it's not about optimizing inflation and employment. It's none of that. What they're doing basically is starting out the ultimate goal. Let me get to the ultimate goal, so your audience get to the essence of what we're looking at here. Is the ultimate goal for the fiat for the Federal Reserve, which is controlled by a few people, maybe less than a handful, is monopoly money for them to print eventually and own everything. So today, my estimation is they probably own 80% of the world assets, 80%. So Elon Musk is not the richest guy; it's the guys behind the scenes that's controlling Federal Reserve. So collectively, they own assets in the hundreds of trillions of dollars, Jesse, and through the mechanism, through the proxies of BlackRock, Vanguard, and State Street, none of them 20 years ago had anything, amount to anything. They have now control. They own 80% of S&P 500, so they own about $50 trillion of the investable dollars in the equity market. Started out with the noble concept of managing the money on behalf of the United States government, and then print money in the times of need, and managing money supply, and balance the inflation and employment. So these are just the euphemism. These are just the talking points to get the politicians to buy in. But in my view, and I've been watching the market for 30 years, that these people are on a controlled purchasing purchasing scheme. And we used to talk, Jesse, about 20 years ago, a plunge protection team, they come in times of need. But now basically you have a controlled buying on a daily basis to the tunes of tens of billions or hundreds of billions of dollars. And to the point now they're controlling more than 85% of the market. There was there has been a few major correction namely the financial crisis in the 2010, and you have the COVID crisis, and then most recently, earlier 4 months ago, you have the tariff discussion, right? So these were just triggering point for the transfer of equities from the foreign investors, from the Chinese, from the Japanese, to, again, the guys behind the scenes. And to the point right now, they're controlling close to 90% of the investable assets, hard assets in equity market. So I just want to caution. I think I follow a lot of the guys like Chris Verman and all these guys. Their guys are still doom and gloom. There's no doom and gloom left. They are the market, and they have a limited amount. They have a printing press. When Elon Musk was doing the Doge, he said he found 14 printing machines. One sitting at Department of Treasury, one sitting at Department of Defense, one sitting at Social Security office, and one sitting at whatever. I think there's probably, and the guys they have a few of them sitting in the back, and they're literally able to print at will. It's a long-winded answer to your question. We're going on about 11 minutes, which is a good segue to the next point. Is we're not really looking at what's driving the equity market or the markets in general. It's not geopolitics. It's not the economy. It's not S&P 500. It's not earnings. It's not multiples. It's none of that. It's just a matter of wealth transfer of assets, of assets from the general public to just a handful. And this kind of reminds me, Jesse, because we have a project in Bolivia. We talked about it. And back in 2005, Morales came on, and he nationalized a lot of these industries because Glencore came in. They obviously had access to Mark Rich and have access to a lot of money. So they were buying a lot of the national assets, right, in Bolivia for pennies on the dollar, nationalize it, and then they check out the prices in water, in electricity, in everything, public utilities, and they're raking it in. I don't think it's no different from what's happened in the S&P 500 in the United States, in that they're controlling 80% of Walmart, 90% of Apple, and when they believe it's time to come to roost to implement their 2030 agenda of own nothing and be happy, they simply just issue directives to the McDonald's, say it's time to jack up your price. And consequently, that's exactly what they did. It's not got to do with economy overheating, Jesse. It's not to do with, it's got nothing to do with oil. Come on, this is all that there is. This is a central plan. What we're witnessing is a central planning to the extreme, and it's going to get worse. Inflation is not going to, you're not going to get housing prices come down. You're not going to get commodity price coming back. And as I mentioned in the last show, silver is going to go back to 50. It's going to go 50. It's going to go to 70 this year, probably in August, because people are coming to the realization that gold is not going back down to $3,000. This is a new platform for gold. And I think gold is been dancing around, hovering around 50-day moving average at around 3,300 for the last 4 months, whereas the 200 days catching up to 3,000, close to that. And it's setting a stage for gold to go to the next level, which could be 3,500 to 3,800. I am not as confident in that regard because gold has come up so quickly from 1,800 to 3,400 in the last 2 years without any interruptions. But as gold continue to hover around this $3,500 level, you're going to see revaluation of a whole slew of assets. Silver, if gold stays at 3,500, silver is going to go to 50 to 70. Platinum could go back to 2,000. Oil right now is trading at 50 barrels to an ounce of gold. Despite the worst fundamentals of oil could easily get back to 100, and that would still be undervalued relative to gold. And Dow and S&P and NASDAQ going to continue to tread waters or going to go higher. It's not to do with fundamentals. It's just because the guys behind the scenes continue to print, to buy. And I want to move on to fluorspar and vanadium because that's the topic of our conversation, which I'd like to share with the audience about. And just like the cartels, they have unlimited supply of money, fiat, to buy S&P and Dow and Nasdaq, there may be occasional correction, but I think the magnitude and the frequency of the correction is going to be less and less because there's nobody left to sell. At the same time, the cartels are working overtime to short gold and silver. And I think I talked about in last show how they're doing that through hollowing out of the ETFs and getting the physical out of the vault and smashing the physical market and also shorting through the futures market. They don't. I think some of the people say cartels lose control. They don't. They never lose control, and they will never lose control. Meaning that they have the bankroll. They can have a fiat. They can have a negative $500 billion printed on paper loss, right? So it's all about who's buying rather than who's shorting. So as the physical market continue to strengthen, the cartels will continue to rack up unlimited losses, and that's not to their concern. You're going to have occasional buying or covering of the shorts, and these are the algo funds out of New York that they don't understand that the tide has turned, the general has retreated. And we also talked about when there's a top in the market for gold and silver, of which will be facilitated by the cartel, and they'll be buying the paper market. So there will be a top in place for silver, probably sometime this year, September, or at least a peak. Very shortly, you're looking at potentially triple digit. And then there's going to be consolidation or correction back to the $50 to $70 level. So all in all, I'm very bullish of the metals. I think there's going to be revaluation, and it's not to do with the geopolitics. It's all to do with loss of confidence in the fiat, and there's quite a number of well-to-dos, Jesse, the billionaire club, or the centi-billionaire clubs. They just don't want to be governed with these micro mandates of SWIFT system and digital currencies. And this is really the divide, and this is sort of the tangibles versus fiat dilemma that we're entering into.
Well, it sounds like generally you want to get a hold of hard assets, things that they cannot print. You spoke about gold and silver. I know you're also very bullish on fluorspar. Let's start with that and with a very basic question, because I think most are not familiar with this metal. What is fluorspar? What are its main uses, and why should investors care about it?
Yeah, I only got into the fluorspar space last year. My specialization is precious metals and critical minerals, of which I started studying 10 years ago. Fluorspar is one of the critical minerals as assigned, categorized, designated by the U.S. Geological Bureau. And it has it's all got to do with the electrification of the world. So what I mean by that is fluorspar is used in power generation, such as uranium enrichment. When you enrich uranium, Jesse, what you're doing is to concentrate the U-235 from the U-238, because U-235, as your probably uranium bug, is the uranium that's fissile. But in order to enrich uranium, you have to inject fluorine gas to levitate the uranium, and then you can go through the diffusion and centrifugal to concentrate the U-235. So for every uranium atom, for every uranium 235, you need 6 fluorine atoms, which is uranium hexafluoride, to go through that enrichment process. Fluorspar is also used for energy storage. So, we talked about lithium, which is the medium for storage of electricity, and the anode and the cathode, which is transition metals in cobalt and in nickel and in manganese. But people don't realize that it's the lithium hexafluorophosphate that is the electrolyte that enable the transfer of lithium from the anode and cathode, that enable the charge and discharge of batteries. So every single lithium atom in EV batteries require 6 fluorine atoms, and just and if you step back a bit, the reason fluorine and fluoride is so, and fluorspar, which is the earthy form of the minerals of which fluorine is part at, is that fluorine is the most reactive and one of the lightest reactive and corrosive element in the periodic table. That's why think of it as like a Victoria's Secret model, right? Even the nerdiest bookworm would take notice, and that's why it's able to bind with uranium. That's why it's able to bind with lithium. And it's also able to bind with sulfur. So sulfur hexafluoride is an insulation gas that's able to separate high voltage switches. When you're transmitting 600 kilovolts, high transmission lines over hundreds of kilometers, you have to have the sulfur hexafluorine gas to do the electrical switches. And then last but not least, Jesse, it's got to do with the modernization, the artificial intelligence world we're entering into. Remember that fluorine gas is required to etch to wave patterns onto the silicon wafers. Remember, Jesse, before, like not even 15 years ago, we had this Motorola phone, right? That's take lousy pictures. These are 50 nanos. And now the technology has got to 3 nanos. The size of a silicon is gone, the size of the spacing has gone up to the nano atom molecular level. And fluorine gas is absolutely required in order to etch the semiconductors to the shape and to the form is required for all the NVIDIA chips, all these TSMC chips, all the artificial intelligence, robotics, all require fluorspar. And also, in addition, I forgot one thing is, in addition to uranium, power generation related to nuclear, fluorspar, fluorine gas, is also a key element in solar panels, which is the largest principal energy production increase in today's world. In that, fluorine gas is used to texture the silicon, to optimize the shape of the silicon to absorb sunlight. And last but not least, fluorine is act as a fluxing agent for producing the highest quality steel and aluminum. So all in all, I would just call it sort of the Robin to the Batman, or the Scottie Pippen to the Michael Jordans. Everybody knows about the lithium batteries. Everybody knows about nuclear power in uranium. People know about silicon and steel and aluminum and copper. But the unsung hero is fluorine. That's why you're seeing fluorine prices, fluorspar prices gone up steadily since year 2000, where it was around 5 cents a pound. But in the last 2 decades, the price has quadrupled to 20 cents a pound, and yet people don't take a lot of notice. And the reason I've taken notice is because I was in China last year to promote our silver project, and what everybody's talking about is fluorspar, of which China produced 60% of the world fluorspar production, but China is not getting enough. It had turned into a net importer since early 2020, and that's why fluorspar price has gone up 50% in the first part of this decade.
Very interesting. I want to talk about your project more in just a moment, but first let's discuss vanadium, another material that isn't often talked about. The majority of vanadium is used for alloying steel, but it has other applications as well. So walk us through why vanadium is critical and why it's attractive from an investment standpoint.
Right. So Jesse, I got into vanadium almost 10 years ago. Vanadium and fluorspar is a little opposite in its application, in its demand per se. So 80% of the vanadium is used for steel and aluminum. 0.5% of vanadium going into aluminum and steel rebar strengthens the metals. And so for fluorspar, it's 80% electrification of the world, and 20% steel and aluminum production, of which is used as a fluxing agent to eat away the impurities and protect the steel and aluminum from oxidation. And whereas vanadium is the opposite. 20% of the vanadium is used for electrification with the advent of vanadium redox batteries, of which is superior than lithium because the anode and cathode and the electrolyte is all vanadium. It's good for 20, 30 years and plus. So vanadium is opposite. So the 80% of the vanadium is used for steel, aluminum, rebars. And that's why vanadium is going through a correction because of the slowdown in the global economy and the property markets in China in particular. So that's why I kind of switched focus from vanadium to fluoride, whereas fluorspar has such a wide range of applications, of which 80% is concentrated towards power generation through solar and nuclear, and energy storage in batteries for EVs, and also energy grid, and then the high voltage insulators and the AI. These collectively is 80% of the fluorspar usage, and that's why I think that for investors looking into sort of modern industrial modernization, fluorspar is a better pick, and it's been late than never. And I think we're only in the third inning in this fluorspar renaissance.
So how does CleanTech Vanadium fit into the picture? Maybe start by giving us an overview of the company.
Jesse, I've been on your show talking about silver elephant for a while. So I had over 25 years experience in the commodity industry, and I actually started out my career in the .com industry in the late 90s. So I caught the first .com wave, and that's why my specialization is in gold and silver. So I was a very good friend of David Morgan and Gada, James Turk. So I was apprentice and student of all these great figures back in the early 2000s, and got into silver when it's $3 an ounce and gold was less than $250 an ounce when Gordon Brown dropped the last batch of gold from the Bank of England's vaults. And I started to study critical minerals in 2015 because of my tech background, and see that there's a lot of the elements in the periodic table has found new home in new applications. So I've raised over $200 million through the Toronto Stock Exchange for Silver Elephant. In 2021, Silver Elephant spun out the non-silver assets into CleanTech, formerly known as Fly Nickel. So there was the nickel project and vanadium project that was sitting in CleanTech. And CleanTech subsequently sold the nickel project because the First Nations in Canada received a lot of money from Trudeau and just kind of waving hand goodbye because I was not much used to them. And then we sold that project, and then we take the cash proceeds earlier, just 3 weeks ago, acquired the Fluorspar project. So at this point, CleanTech is trading on the TSX Ventures under the symbol CTV, and has a vanadium project in Nevada that received the record of decision from Bureau of Land Management. And then also has this parallel focus in fluorspar in Kentucky, also in the United States, with this Campbell Crosser project that was drilled out quite well before 60 drill holes in historical resource. I believe, Jesse, that our vanadium project is the most advanced primary vanadium project in the United States. And then the fluorspar project is the largest resource, albeit is historical resource. That's sitting in a North American trading vehicle. So the objective, the goal for CleanTech CTV is to become one of the premier critical mineral mining development company with a focus in the United States, primarily vanadium and fluorspar.
Well, let's talk about your vanadium project, Gibellini, I believe it is, in Nevada's Battle Mountain region. And we're going to read something from your website, which you alluded to. The project received a positive EIS record of decision from the BLM in October 2023 and has multiple state permits. So give us some more details on that project and the next steps moving forward.
Yeah, Jesse, mining is such a complex industry. I've been at it for 25 years now. I'm still learning, and I've learned about metallurgy, permitting, the bird permit, the snake permit, the horse permits, the recoveries of oxide, sulfide, refractory. I've traveled 35 countries around the world, scouring for projects, dozens of projects. This project, Jesse, this vanadium project is the best one in the world, and it's extremely unique in that it's an oxide that's amenable for hydrometallurgical heap leaching process. So what that means is this low carbon footprint, very low strip ratio of 0.5 to 1, is in Nevada with readily access to power and water, and is permitted on the federal level. So I can call this almost shovel ready. It's a miner's dream come true. Can you imagine a hill with no strip ratio and that it could go the heap leach process? So the project took almost 10 years for us to assemble the land package of 21 kilometer strike. And it is a generational asset, and I don't say that lightly. There's already probably 10 years worth of reserves to supply the need of entire United States vanadium need, of which there's no vanadium production in the United States. But we're only touching the tip of the iceberg, Jesse. We believe that entire system is mineralized of a 21 kilometer strike. So we just got to bide our time and wait for a rebound of the vanadium price, wait for a reflation of the global economy. And this project is going to be supplying the vanadium need for the United States for generations to come. So we're very excited right now. It's in a care and maintenance stage. And in addition to securing a 21 kilometer strike mineral belt of vanadium, we also purchased a farm, of which that's just adjacent to the mine. So that will take care of addressing the real estate need to construct housing. And the farm features a 5,000 gallon per minute class 2 spring. So we have the water checked off, and also sage-grouse credits, which is a bird credit required to develop projects in Nevada. So that's also taken care of. And it's a project that's taken CleanTech almost 10 years to get to where we are today, at a cost of around $20 million. And that's in addition to the $20 million spent by Gibellini's predecessor. So altogether, the project received close to $50 million in development to get to where we are.
Well, let's talk about the Fluorspar project, because as you mentioned, you recently entered into a binding option to purchase agreement for 250 acres in the Illinois Kentucky Fluorspar District, which you said in your press release is, quote, a region long recognized as North America's most prolific fluorspar district. Walk us through this agreement and your plans for the property.
Well, Jesse, we are incredibly excited, and as quoted in the news release, a mega firm believer in fluorspar in this particular Kentucky, Illinois fluorspar belt, which is the largest. Jesse, I think somebody once quoted, I paraphrase, if you gotta look for an elephant, you gotta go to where elephants are born, right? So this Kentucky, Illinois belt is the largest, most prospective fluorspar belt in the United States, of which there's not actually 3.5 million tons as quoted in the news release, but over 10 million tons of historical production back up to about late 70s, and then the mining stopped there. We researched well over 30 projects in this mineral belt and settled on Kempo Crosser, and that has close to 1 million tons of historical resources with over 60 drill holes. So and the project has the potential to supply up to 10 to 15% of the needs of the United States current fluorspar need today, of which is half a million tons coming entirely from Mexico and parts of U.S., of which there's no fluorspar production in the U.S. today. The project is sitting on private land, so it doesn't have extensive permitting requirement from or sort of governing from the EPA or the BLM of the United States. On the federal level, and it's readily access to power and water. It has good modern infrastructure in Kentucky, and all in all, we don't see any impediment to accelerate the development and production of this project within the next 3 to 5 years, and that is a very short time frame. Sort of talking about putting a mine to production in the United States.
Well, is there anything we haven't yet covered when it comes to CleanTech Vanadium, or anything you think it's important to emphasize to potential shareholders of the company?
Yeah, I want to go back, Jesse, to the theme of Batman and Robin and Batman and Scottie Pippen and Michael Jordan. The North American investors are oftentimes, just based on empirical evidence, historical evidence, to this boom in critical minerals commodities. I mean, we see lithium companies in North America was on the verge of bankruptcy in 2016 to 2018. All of a sudden, at the flip of a switch, lithium become known, and lithium prices doubled and tripled in a short order. We also witnessed vanadium as well back in 2018 when the buses came out and the adoption of the redox flow batteries. Vanadium prices went up 10 times in the span of a year. And the vanadium went from completely obscure, invisible to a bit of a household name back in 2017 and 2018. And then there's the rare earth, which is the new. And you remember cobalt about 4 years ago when cobalt prices went up 5 times, and Apple was talking about buying cobalt supplies from Congo. And now the latest buzzword is rare earth. I mean, the acute nature, like the dominance of the rare earth market by the Chinese is well known 10 years ago. And all of a sudden rare earth is not the buzzword, and the rare price is flying high. And United States right now, the government is investing billions of dollars of rare earth projects in the United States. So I think somebody said you better being wrong, being early is like being wrong, but we are just in that inflection point, in my view, of fluorspar. And the reason is, as I said, twofold. Is what first is China. China has 50 years of rare earth reserves, but it has less than 10 years of fluorspar reserves in its inventory. China is producing 6 million tons of fluorspar, has about 60 million tons of fluorspar reserves. China's demand applications, especially in the explosion of the EVs, 6 million tons is not enough. It's taken up almost majority of the Mongolian production of 1 million tons. And right now, so China is controlling 70% of the fluorspar market of 10 million tons a year globally. And so if you study Donald Trump's initiatives in wanting to build a steel plant, aluminum plant, imposing tariffs of steel, aluminum imports, Donald Trump want to create a TSMC factories and AI investment from the Saudis and the Japanese. So all the semiconductors in Arizona are going to require fluorspar. All the aluminum and steel production require fluorspar, and China is producing 2.5 times more electricity than the United States. So if the United States is going to do the steel production, the artificial intelligence, and all the other things, it's going to need to double its power generation. And to do that, it's going to need double or triple the amount of nuclear and solar, and those require fluorspar as well. And then Elon Musk is talking about building a first factory, EV battery factory in the United States. And guess what? That's going to need electrolyte as well. It is my firm belief that we are embarking on a major bull market in fluorspar, and I would not be surprised if fluorspar price double in the next 3 years. It already gone up 50% earlier this year, so the trajectory is going exponential. And that fluorspar, in my view, is a deja vu. It's going to be entering the repeat path of what you're looking at rare earth. And I think for the early investors, CleanTech is wearing a driver's seat to capture that market. And just the last point is, Jesse, I've been in the commodity market for 25 years. It's all about timing. So CleanTech, when it's IPO'd, on the vanadium ride in 2017, Elephant and CleanTech market cap went up tenfold from 10 million to 100. And the second that happened in 2021, when nickel went up tenfold from $4 to $50 a pound, CleanTech went IPO at $100 million market cap. Jesse, CleanTech's market cap right now is $5 million, with about $3 million in the bank left over from the nickel disposition sales. So you have a vanadium project with over $20 million investment that's permitted at the federal level. You have a fluorspar a play with the largest known historical resource in a publicly traded vehicle on the TSX. And altogether, you're buying all of these assets for less than $2 million market cap because the company has $2 million in the bank. CleanTech is 50% owned by Elephant shareholders because it was spun out from Silver Elephant. So we have a very good share structure, and the insiders been buying the market since the news came out on July the 2nd. So we have a good share structure. We have assets focused on the United States, very low political risk. We have critical minerals development in the United States, of which U.S. does not produce vanadium nor fluorspar, and the company and it's managed by people that know how to permit and get our ways, navigate our ways through the United States permitting. So it is one of the most exciting stories, and that's why I insisted on coming on your show again to talk about fluorspar, even though I was just on your show less than a month ago, Jesse.
Well, I always love talking to you, John, because not only do you have exciting projects happening, and this one certainly seems like one of them, but you have a ton of knowledge when it comes to geopolitics, the precious metals markets, financial markets, and the economy in general. So always love our conversations. I'm going to put a link in the description below to CleanTech Vanadium's website, as well as social media profile for people who want to follow along with the company. And once again, it's been a blast, and thank you so much for coming on the show.
Thank you, Jesse. The symbol is CTV on the TSX and CTVFF on the OTC. And feel free to shoot me a tweet. You can look me up on Twitter. Just search John Lee CleanTech.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.